Good afternoon all. CamelbackTrading.org coming to you this Friday afternoon, September 10th. We are looking at Window Trader's market profile of SPY, IWM, and Triple Qs, and pretty poor performance by the bulls today. For once, the market did again what it used to do on trend days. The only thing it did today that was a little unusual was raise POC in SPY and ES. But for the most part, lower value, nice sell tail, held single prints, had another one in L, go out with a price probe. You name it, they did it. Good volume also, especially at the end of the day. Over 80 million with the after hours to go. So we had over a $6 range. We're going to have probably 85 to 90 million in volume with the after hours. Remember I said yesterday, did the winds change? Has something changed in this market? Well, early on today, it looked like maybe that wasn't the case as we opened and ran right out of the gate, took back yesterday's double distribution day. But that's it. After that, we got acceptance back into the lower distribution, and from then on, sellers reigned the day. They controlled everything throughout the trading day. Triple Qs, same thing. They go out. After filling their double distribution day yesterday, they go out with a triple distribution just like we do. They have two sets of singles and a price probe. Russell has no single prints, but they have a decent sell tail, and they also price probe. As for us, like I said, sell tail, single prints and B that held, which kind of cost me a huge trade, and we'll go over that in a minute. I had a really good day, but I didn't take the size trade, and I'll tell you why in a minute. And we had another single set in L. Now, the first trade I took today, believe it or not, was a long after we opened and went up. Now, we knew this was short covering. But when we pushed down the first time, I thought maybe, just maybe, they would hold value low and even the overnight POC. Now, we got to the overnight POC. I took a trade. Nothing. Well, it was a decent size to start. Because when we opened and went above, I said, there's no doubt we're getting to that POC. We got to it. I started a position. At value low, I added some pretty good size. And I was fortunate. Of the 449 calls, fortunate to get a push up to get out of them. I ended up losing $86 on the trade. Because at one point, I was down some pretty good money when I first started that trade at the overnight POC. So I was down pretty good. So it gave me the ability at value low from yesterday to add size. It went up enough for me to get out basically even. After that trade, I took shorts the remainder of the day. I shorted B. We had a highest accepted price in B. All right, that's when A closes. B opened. We went a penny above it. Never saw it again. That's a true highest accepted price. It showed you how strong sellers were. And we told the room that right away. So we started taking shorts, scalp shorts 3 times in B period, the 451s. Then, you know what? I lied. I did take one more long in C period against the 20-day moving average when it came down pretty hard. The first time against the 20-day moving average, you got a nice responsive buy. I bought the 447 calls. Then, shorted E, 450s. F, when they filled the single prints, I shorted the 450s again, came back enough. Now, here's where I was looking for the huge trade. We had lower value. Even though they raised POC, I was like, even if they filled this other set of single prints, I really don't, the market's done nothing but V-shaped recover, right? But something has changed these past couple of days. And I said, it's not going to happen today. But I also thought the odds of finally filling all the single prints and getting an afternoon rally high were good. So even though I probably recycled 60 puts in G and probably another 40 or 60 in H, I didn't take the size play because I was like, if they're that close, maybe we get them. And it was going to start with minimum of 100 and probably bump it between A's low and B's high to 200-300 puts. Never got there, never took that size. So I recycled a bunch of them in G and H. It was very good. And then in J, the first time J got down to the 20-day moving average again, a real quick call play that paid me. So my call plays were quick today. and against very visual levels. And in L period, I did nothing but scalp shorts again throughout the time frame. I didn't do anything in M. Should have. A lot of times I was having a really good day. I'm like, M gets erratic. I thought there was a good chance of attempting to test that other weekly low. We got close to it, but did not get it. So it really was a good day overall and a good week for a short week. I only worked Wednesday, Thursday, Friday. As far as destinations, the first thing we have is the price probe, which is L's low of 446.79. I just want to see something because I forgot to write down B's high from today. So B's high is 449.71. I got to make sure I have that. 449.71. Okay. So then we have the single prints. They start at M's high to E's low, 447.02 to 34. Then we have the other set of single prints, 449.39 to 49. That's the last remaining ones in B. Then we have B's high of 449. And I totally forgot what I just told you. Shows you where my mind is late in the day. 449.71. That's the lowest accepted price. 449.71. In fact, let me just write that down because I forgot to write it. Then we have today's high of 451.49. 452.57 daily high, poor high, and 452.81 is now a weekly high. Now, downside, we have 445.31, which is now a weekly low, today's low. Then we don't have anything to 445.14, which is another weekly low, and then fill in the gap at 443.71, 143-point gap. Now, 445.14 will be the bottom of this 3-week balance. Boy, is that going to be important, and I'll show you why on the charts. Now, I'm going to give you a bunch of other downsides so you have them so I don't have to go over them on Monday. 443.55 price probe from the August 20th. 442.46 afternoon pullback low from the 20th. 441.74 lowest accepted price from August 20th, 439.71 daily low, 437.46 afternoon pullback low from the 9th, 436.12 weekly low, and then 436.10 monthly low. Keep that in mind. Now, let's go to the charts. We are going to break down all 3 of these indices, okay? So first we're going to start with Russell. Russell is in a 6-month balance. Nothing's changing in the bigger picture. The one thing, though, that they failed at so far miserably is they took out last month's high of 227.35, which was an inside month. Well, right now, they're right back into it by $6. So there's still two-thirds of the month to go. But so far, inside month up has failed. 6-month balance. Weekly. We are back in balance. We were up the. Remember I said maybe some things are changing last week? We came out of an inside month to the upside. The weekly was up. Well, now the monthly failed so far and the inside month up. And the weekly is firmly in a 3-week balance again. Which the bottom of it is 217.44. And on the daily, you could either call it down or a 3-day balance. Again, it's very subjective. Don't forget, there's still a small, excuse me, still a small gap above that they never filled. So again, you could call this either a 3-day balance or down, whatever you'd like to call it. And they closed right around the 20 and the 50-day moving average. Triple Qs. Monthly's one time framing up 4 months. It's still very healthy. Weekly. Weekly did not get taken out. 376.83. Yes, it did. I apologize. Weekly did get taken out. In fact, give me a second here, because this is something I didn't notice. So we made a new all-time high this week. Or did we? 382.71. 382. Yep. We took out last week's high by 7 cents Oh, this is very interesting. And we close below last week's low. Barely, but we do. So we have an outside week down after making an all-time high this week. Very interesting. So the weekly's in balance. So the monthly's up. The weekly is in balance, but it's an outside week down. Let me just make sure. I want to make sure these numbers are right. 376.83 last week, 376.25, and we closed at 75. So yeah, very interesting. So monthly up, weekly balance, outside week down. We haven't had that in a while. And the daily is down. Things are changing. Let's go to SPY and ES. Now don't forget a couple of things. We have expiration and dividend coming up this coming Friday for SPY. So we're going to have a big disconnect at the end of next week on the profiles. Now, the monthly is one time framing up 11 months. I briefly touched on this last night. I said, I'm not looking for this yet, but we have to keep it in the back of our mind. We took out last month's high for an all-time high. Well, now, we're not that far off. It's still $9, but the way the market's starting to move, we're not that far off from the monthly low. There's still 20 days to go in the month. So, if something really did change and sellers are starting to get their act together, the last line of defense is going to be, and I'm going to show you now, this weekly low and the gap on the daily. Why? Because if you get acceptance below the August 23rd's week, that would be coming out of a 3-week balance to the downside, filling that gap most likely, and then your next destination, big destination, is the monthly low. So that is going to be a huge area for bulls to defend. And that's that weekly low of 445.14, and for sure the gap at 443.71. Because if they don't defend that, the monthly low becomes a target finally. So the monthly's up and healthy. The weekly is in a 3-week balance. And the daily is down. So we went from balance, remember we had a 6-day balance, to down. Back to balance yesterday because we took out the previous day's high. And now we just came out of a 2-day balance, down again. Why is this important? We haven't seen this too often, have we? Right? We've always been buying the dip, buying the dip. Well, so far, this week anyway, sellers proved to hold their own. Now, every time we've gotten below the 20, we've gone and at least came close to testing the 50. Excuse me. The only time we didn't was the last time we closed below the 20, which was August 19th. We never got to the 50, and then we started that whole grind back up. Right? Up, gap up, and that's the gap I'm talking about. That's huge. Right? Gap up, higher, balance, up, balance. So, sellers have every opportunity in the world to not only go and fill that weekly gap, but the next big stop would be the 50-day moving average, which was 441.43, and then go for the monthly low. Are they going to be capable of that? It certainly remains to be seen. Right? Volume right now is 89 million shares. That's pretty good. But look at these days. Back on August 18th, we did 89 million. On August 19th, we did 92 million. Wow, here we go. And then it just stopped and back up. Right? Even this day, 148 million. So, obviously, the down days have produced the volume. The problem is there's been no follow-through. Is this time different? I don't know. If you look at this daily chart, here's your daily chart all year. Every time we've attempted the 20 and 50, we've spent no time there. Remains to be seen. We'll see if the buy the dip crowd is going to prevent that from happening again, or are bears finally going to rear their ugly head and really, really maybe get this down to a 410, 420 level. Remains to be seen. Hope you had a great day trading. Enjoy the weekend. And we'll speak prior to the opening on Monday.